So it seems to me, this is what I feel, that everyone has been getting rich off a certain stock this year except for me. I have heard people talking about this stock like crazy for the past several months, and I have just sat out on the sidelines and I've just watched the stock go higher and higher and higher. I have to be honest, I have had a serious case of FOMO, fear of missing out, with this stock. I've just watched it go higher and higher. I've wondered, should I wait for a pullback? And so I finally pulled the trigger a couple weeks ago and I bet $16,000 on this stock. I'll tell you exactly what I did in just a little bit, and I will tell you what I think you could do if this is something that you are interested in as well. All of that in just a little bit. The stock that I'm talking about went public back in September of 2018, and within just a couple weeks, it had already doubled in price. But then it went pretty much nowhere but down from there. By the beginning of this year, it was a penny stock trading at $3.72 per share, which was about half of what it was at its IPO. So its earliest investors were sitting on huge losses by the beginning of 2020. But holy smoky, you guys, what a difference a year can make for a stock and for its investors. This year will go down in history for the stock I'm talking about, which has been one of the hottest stocks of 2020. Just look at this stock chart from January 2nd until December 1st. The stock had gained over 1,200%. That is enough to turn every $10,000 investment into over $125,000. The stock I'm talking about is the electric vehicle maker NIO, ticker symbol NIO, which has been called the Tesla of China. In today's video, I am going to show you what I think is the safest way to make money on NIO right now, even after its huge run up already this year. And even after considering the fact that Congress just approved legislation called the Holding Foreign Companies Accountable Act, which could ultimately lead to the delisting of Chinese stocks which don't meet US standards. But if that happens, that would be 3 years away, and we would be in and out of our trade well before then. Our trade would ideally be closed by June of this coming year. All of that said, I just made a $16,000 bet on NIO stock that guarantees that I make money whether the stock keeps going up. I make money whether the stock starts to just go nowhere and it starts to trade sideways. And I even make money if the stock falls as much as 60% between now and June. So that's what I'm doing. The good news for you is that you have an even better opportunity than I had. So you can actually make more money with less risk. And I'm gonna get to all of that. I will show you exactly what I mean and how you can do that in just a minute. The neat thing about the strategy that I'm gonna walk you through is even if you're not interested in NIO stock, you can do this on practically any other stock. The idea behind the strategy is the same, whether we're talking about Apple, Tesla, NIO, DraftKings, Johnson & Johnson. Some stocks are just way more affordable to do this with, and so the lower the share price, then the more affordable that the play is that you can make. Before I get into all the details though, if you are getting any value out of these videos whatsoever, please consider giving this video a thumbs up. If you're new to the channel, welcome. My name is Greg Patrick, and we are all about sharing our best ideas for building passive streams of income. If that sounds like something that you want to follow along with, then please consider subscribing to the channel. I can say that without a doubt, investing can be life-changing. I am currently generating about $8,000 a month in passive income, and a lot of what I'm doing, I am sharing with you guys. I'm being completely transparent on this channel. It is my hope that there is something that I can share with you that will help you in your own journey. My personal investment goal is to generate $30,000 a month in passive income by the year 2030, which is about 9 years from now. I have already shared a few ways that I plan to get there. I'm investing in dividend growth stocks, I'm investing in tax advantage municipal bond funds, and I'm investing in rental property. I'm also doing some other stuff that I don't think a lot of people are that familiar or comfortable with. And one of the things that I am doing is I am generating relatively safe, high income from growth stocks like Alibaba, Tesla, Nvidia, DraftKings, and more. And I'm doing this by using a strategy that I'll be showing you today. So even though my end game is to generate safe passive income from my investments, I am using high-flying, highly volatile growth stocks to help me get there. And the most recent example that I want to show you is what I just did with NIO stock. NIO is one of those stocks that I feel like I've been missing out on. It seems like everyone is getting rich off this stock except for me. Now, I say everyone because I subscribe to some stock-related channels here on YouTube that are pretty dedicated to covering the electric vehicle space. And judging by the comments, there are a lot of hardcore fanatics in that space. For example, one of the channels I subscribe to is Stock Mo. Stock Mo comes across as a really down-to-earth guy. He's a former stockbroker who has been teaching investing and finance to kids, and then he just recently started a channel to help teach others, and a lot of Stock Mo's videos are dedicated to growth stocks in the electric vehicle space, like Tesla and NIO. So if you're looking for more information on these stocks than what you'll find on this channel, then go check out Stock Mo's channel. I'll put a link in the description. Anyways, if you look at all the comments on Stock Mo's channel, on his NIO videos, and if you look at other channels that are covering the EV space, it seems like everyone has been investing in NIO, except for me. I'm just being honest here. So I've had this serious case of FOMO, or fear of missing out, with stocks like Tesla and NIO this year more than ever. Obviously because of their huge run-ups. And I found myself in these situations where I've had to make a decision. Do I jump in now and hope these stocks keep going up even though they look insanely overvalued? Or do I sit on the sidelines and wait for an opportunity for them to pull back? Elon Musk even just came out and basically set expectations that Tesla stock could take a beating if the company's costs get out of control. Investors are pricing in huge growth for the future, and their margins are already so slim that it wouldn't take much for investors to bail on the stock and knock it down. Yet, the stock keeps going up. And the more it goes up, the more I shake my head and beat myself up about not getting into the stock earlier. I have made a few $1,000s in safe passive income off of Tesla this year. I made a video on one of my trades. I'll put a link in the description. But even after making that income, that is nothing like the gains that I could be sitting on if I had just bought the stock and held on to it. So obviously, hindsight is 20/20, but what can we do in these situations? I think the safest way to play them is to do what I have done with Tesla and some other high-flying growth stocks this year, and what I just did with NIO. In short, I made a move with NIO stock that pays me whether NIO goes up, sideways, or even drops as much as 60% from recent prices. And here is what I did. At the time I placed my trade a couple weeks ago, NIO was selling for $49.62 per share. Meanwhile, the May 21st, 2021 $20 strike price put options were going for $1.29 per share. What I did was I opened an order and I sold 8 of these put options. There are 2 probable ways this trade will work out, and I am happy with either outcome. So if NIO falls below $20 by May 21st, I may be obligated to buy 800 shares of NIO at $20 per share. This is a $16,000 commitment, or a bet on my end. In exchange for agreeing to that potential purchase obligation on my end, I was paid an instant $1,032, which is 800 shares times $1.29 option premium per share. This money was immediately deposited into my 401k retirement account, which is where I made the trade. So taking this income into consideration, my cost basis on NIO would drop to $18.71 per share. That cost basis of $18.71 per share is a 62.3% discount to the $49.62 share price that NIO was selling for at the time I made this trade. That is just an absolutely huge margin of safety that I have. So the stock could basically fall as much as 62% and I would still come out ahead on this trade. If I do end up owning NIO at a cost basis of $18.71 per share, at that point, my potential upside would range from very good to spectacular. So Morningstar gives NIO a fair value price of $26.96 per share, which would offer me 44% upside from my $18.71 cost basis. And according to TipRanks, based on 10 Wall Street analysts who are offering stock ratings for NIO in the last 3 months, the average price target is $48.41 per share. If the consensus from these analysts is right and the stock trades back up to their price target, then I could see 158% gains, which is enough to turn my $16,000 bet on NIO into almost $40,000. So that's scenario 1, which is what could happen if NIO falls below $20 by May 21st, 2021. Scenario 2, if NIO stays above $20 by May 21st, then the put option contract I sold will expire worthless. I'd get to keep the $1,032 in income that I collected no matter what, and I won't be obligated to buy any shares of NIO. So I make money without even having to buy the stock. At that point, the $16,000 in cash that I'd set aside in my 401k to secure this trade will become available to me again, and I'll get to deploy that money into a brand new income generating trade. In this scenario, I end up generating a 6.5% return on what my purchase obligation would have been in 26 weeks. If I can repeat these kinds of results over the period of a year, I could generate a 12.9% yield from NIO without ever buying shares. So this scenario is a winner as well. At the end of the day, the neat thing about this trade setup is that it makes money whether the stock goes up, stays flat, or even drops as much as 62% by May 21st. This is how I make money and generate relatively safe, high income on FOMO stocks, or stocks that I feel like I'm missing out on, but I'm too hesitant to just outright buy them at current prices. Now, there are potential risks or downsides to this trade. There could be more, but I'm going to name the 2 big ones. Downside number 1 is that NIO could fall well below $20 and I'd still have to buy it at $20 per share. That was the deal. That's what I got paid to agree to when I sold this option. And I will say though, that I very much minimized my risk on this trade by selling an option that was so far out of the money. Like I said, the stock has to fall over 62% for me to start losing money on this trade, which gives me a huge margin of safety and would give me ownership of the stock at a cost basis that is still well below analyst estimates. So I'm fine with this potential downside. Downside number 2 is that NIO could keep rising. So if NIO keeps going up, let's say it soars to $100, then I'm gonna have my case of FOMO again. This is entirely a psychological downside. I'll still make money on this trade if the stock goes up, but I would probably beat myself up about not having just bought NIO outright at the $49 per share when I had the chance. So as long as you're okay living with the potential downsides, and I am, then here's what you could do today if you want to cash in on NIO in a similar way that I did. Because the stock is down since I bought it, your opportunity is even better than what I had because you can get paid even more money from the trade and you can take on less risk by owning it at a lower cost basis. Here's what you could do. As I record this video, NIO is selling for $46.60 per share, and the May 21st, 2021 $20 strike price put options are selling for $1.59 per share. If you're interested in getting in on this trade and you have at least $2,000 in your account, you could sell to open one of these put options. For every option you sell, you would collect $159 in cash today. If NIO falls below $20 by May 21st, then you may be obligated to buy 100 shares of NIO at $20 each. Considering the $1.59 per share that you collected when you sold the put, you would own NIO at a cost basis of $18.41 per share, which is lower than what my cost basis would be. If NIO stays above $20 and the put option expires worthless, well then you walk away with $159 without even having to buy NIO. That works out to an 8% return in less than 25 weeks, which works out to a 17.1% annualized yield from NIO without owning the stock. As I have said before, even if you're not interested in making a move on NIO, you can still use this strategy on other stocks. All right, guys, that is it for today's video. Thank you so much if you stuck all the way to the end of this video. If you got anything out of it, please give it a thumbs up. If you're not already subscribed, please consider subscribing. If you want to get an alert the next time that we post a new video, then please enable notifications by tapping or clicking on the bell. I will be back in a little bit. In the meantime, you're gonna hear from Jason again with another high quality dividend growth stock that is trading at a very reasonable price. And so stay tuned for that, and I will catch you guys soon.